All right, so I am back, and we are going to talk about the sold price to list price ratio. So, sold price to list price ratio. So, if a property is listed for 200,000 and it sells for 200,000, then the sold price to list price ratio as a percentage is 100%, meaning that it's sold for what it was listed for. If a property was listed for 200,000, there was a lot of activity, a lot of buyers were interested, and it ended up selling for above what the original list price was, or above asking price, then the percentage of the sold price to list price would be over 100%. If, of course, the property didn't get a lot of action and it needed a lot of work and the seller was motivated and we were in a different market than we are now, the sold price to list price ratio may be less than 100%. So let's take a look at what those stats are. Again, I'm on the stats page. And that's just the page we've been talking about in some of the other videos. And we started off with number of listings. We talked about number of sold. And then right underneath that is the average sold price to list price. And again, the charts are the same. We break out attached and detached. We show 2014 numbers. We show 2015 numbers. We do year to date over here. And you can see Fort Collins for detached homes. For 2014, homes were selling on average for 99.23% of what they were listed for. So less than 1% discount on average. That means that there were a lot that were above, there were a lot that were below, but on average, 99.23% is what we're seeing in 2014. In 2015, in a hotter market, on average, properties in Fort Collins sold for 100.17%. So in other words, they sold for above asking price on average. That also happened in Wellington and Longmont as well for detached homes. For the attached homes, Fort Collins sold for 101.41%, so almost a full percentage and a half above asking price. On a $200,000 property, that's like $3,000. So it's a pretty significant kind of percentage above asking price, in my opinion. And you can see that across the board, we were up from what we saw in 2014 and 2015. So just like every other chart we talked about before, every other stat we talked about before, if you click on the link for the Fort Collins attached, it'll take you to the chart maker, and the chart maker will show you the premium, the discount or premium from list price chart. So this is the one for Fort Collins attached homes, condos and townhomes, and you can see that all the way back in 1997, properties were selling for about 99.33% of their list price on average. In the downturn, 2008, 2009, 2010, they were selling for 97.54, 97.42. So even in the worst real estate market of our lifetime, the properties in Fort Collins, on average, were selling for less than 3% below list price. Now, there are exceptions. I'm going to show you a table here in a little bit that kind of gives you the biggest discounts we saw, just to kind of give you a gauge of what we're seeing. But there's very few of them. And I want you to realize that most of the properties are selling kind of right around this little number. And I could show you that by showing you scatter plot data. And it may be a little bit hard to do the scatter plot data on a chart this size because we're trying to do so much data going back so far. But I want to just try to give you a gauge of what's going on here, if it'll load for me. Yeah, so this is what it shows you. So basically, you can see now all of the little red dots, each represents a property. And if you mouse over, it shows you exactly what it is. But the overwhelming majority of them are selling for right around that kind of like average. There are a couple outliers. For example, there was a property here back in 2014 that sold for 30.9% above asking price. There's one here back in 2014 that sold for 83.33%. But these are the lows too. So I mean, the low in 2009 was 80.57. We're not seeing a lot of properties go for these huge discounts. So if you're watching late night TV or you're reading a book and they tell you, go in there and offer them 30% below asking price. The number of data points that we have, and this shows all the data for all of the Fort Collins attached homes, it's just very small number. So we're not seeing a large number of these properties there. So I'm going to turn off the rate of change. Let me go down here and do that. So show rate of change, no. And it will reload this page here momentarily. I think. Maybe not. So when it does shut off, it will then show the rate of change page without it being on there, and you'll be able to see the lines a little bit easier. All right, looks like we're still having some delays here with that. So what I'm going to do, I will close this window and I will restart. So I'm going to go to 4 columns, pull up the chart again. I will turn off the rate of change so that we're not showing what it is changing year to year. And I will then show, I'm going to change the date to give us a little bit clearer view. I'm only going to look at, I'll do 2005 to present. Oops, 2005. And now I'll plot that, and I will show. Now it's only going to show a shorter line, and then I will add the raw data. Just a lot of data points to be charting on one page. So this shows the numbers there. And what I want to do is like zoom in to show you what's going on. You see how dark this line is? Right around the 100% line. How many properties are selling for pretty much list price? And there's definitely some range here of all these properties, but there's very few ones that are pretty significantly off. That's what I wanted to show you. And we can zoom out and you can see it as aggregate. Or you can zoom in and see any detail you want in any year. You can mouse over and see what the lowest was in any of these years. But we're not seeing a lot of these like 70% of the asking price type offers. That's not what we're seeing. So I just wanted to point out to you that you can actually look at the data and see that. Let's take a look at some of the other ways to look at this data. I've got a couple other pages I want to pull up for you. So the next one is very similar to what we just showed you. Remember how I showed you all the little scatter plots? I'll pull it up again and show you there. But basically, this shows that data, but it summarizes it for us. So for example, I'm going to turn off all these things and just show you. This line now shows you the median. Before I was talking about average. So this was the numbers on this page, the stats page shows you the average. The average sold price to list price in 2015 was 101.41 for attached properties. However, average is different than median. Average is you take all the numbers, you add them up, and you divide by how many there are. Median is you take all the numbers, you order them from smallest to highest, and then you look at the middlemost transaction. What is the middlemost one where half of them were above and half of them were below, and that's what median is. It's the 50th percentile. It means that half of the transactions happen below it, and half of them happen above. So for the median numbers, you can see going back to 1997 is a little bit different than average, but we're seeing that the median is still pretty close to 100% 2015 and 2014. It means half of the transactions were above 100 and half of them were below. In 2013, half of them were above 99.62 and half of them were below. Now, here's the interesting thing. What if you wanted to say, well, show me where the 40th percentile to the 60th percentile are. Where are the properties that are kind of in that meat of the middle? They're 10%, within 10% of the median, and 10% of the median on the other end. So 10% low and 10% high. And that's what this band shows. So when we look at this, we can look at this band here. Right now in 2015, what it looks like to me is, I'll turn off the median so you can see it. It all came to a point. So the 40th percentile, the property that had 40% of the things below it and 60% above it, those actually sold at 100% too. So there were a lot of transactions, a huge mass of transactions at the 100% of sold price to list price. And there was a smaller number that were higher or lower than that. So basically it shows you that it all came to a point. When you look back to 2014, 40% of the properties sold for below 98.93, and 60%, the 60% cutoff, so 40% above that, sold for over 100%. So basically, it shows you this band where you are. Bands that are below 100 are properties that are selling for below asking price. When they go above 100, which I'll show you here in a minute, you're going to basically see that we're seeing a market where a good percentage of these are selling for above asking price. So let's take a look. Turn off 40 to 60. Let's look at the range of 30 to 70. So when you look at 30 to 70, there's more where 70% is at the asking price. However, in 2015, it actually went above. It went to 100.81. Now, if you want to see both of these at the same time, we can put both of them on. It shows you the 40 to 60, kind of highlighted there, and the 30 to 70. So you can see kind of the range. You can also turn these off for now. You could turn on 20 to 80. So this is a full 60% of the market. This shows you where the cutoff was to be in the bottom 20%, and it shows you where the cutoff is to be in the top 20% of the market. So this is the meat. The 60% middle of the market is this 20 to 80th percentile. And you can see kind of what the range is from there. So in 2015, 60% of the market sold between 97.67%, in 4 columns, by the way, and this is detached. So between 97.67 to 102.26. That was the range of where the offers were. So over half of the market sold between that range of sold price to list price. Now you can also turn that off and turn on 90-10 and show where a full 80% of the market is. And then finally, I do a 5% to 95 percentile, which is 90% of the market. So 90% of the market in 2015 sold between 94.55 and 107% of sold price to list price. So properties, in order to be in the top 5% of the marketplace, your property sold for 7% above asking price. Another way of saying that, this is crazy, another way of saying this is 1 in 20 properties in 2015, 1 in 20 sold for 7% or more above asking price. So imagine for a second, you're looking at a $300,000 property and you're thinking about buying it. 1 in 20 is selling for 7% above $300,000 or $21,000 more than asking price. 1 in 20. That's just crazy to me. So anyway, you can go look at these and you can turn on whichever layers you want to see and try to get a feel for the gauge of how it is, and you can look at the median and see how that is affected. But basically, this is a great tool to find out how transactions are moving. Are they selling for above asking price? Are they selling for below? And this apparently is doing, this must be due, oh, this is over time. Okay, so basically this is over time. I'm going to show you another chart here in a second that shows a much finer resolution, and we can see if the market is hot now or if it was hot last year or if it's cooling off. And we can look at this really fine time-wise. We can look at like a week basis. So I'll show you that here in a little bit. But that's the sold price to list price ratio. Okay. Oh, by the way, I mentioned we were going to show you that's the same data that's in the scatter, except we're compressing the scatter. We're kind of summarizing it. So if you want to look at that, that is, we'll turn off rate of appreciation, and we will turn on the scatter. So the chart that I just showed you right here, whoops, right here, this is summarizing all of these little dots. It's basically saying where is the majority of these dots and showing you the cutoff point and then connecting the lines. That's really all that's doing. Okay, so getting back here. So I showed you this chart. We're done with that. And you could do this, by the way, when you go to the website. For clients, you're welcome to go look at this data, and you could see it for other cities as well. So for example, if I just go back to the main page here, I could pick another city. I could look at Loveland if I wanted to and see what the Loveland numbers are. You can just glance at those. Okay. All right, so let's take a look at a different chart. So similar to what we were looking at before, where we kind of break this down into bands, this new chart for 4 columns sold price list price, and this is all single family homes, this one shows just this year and last year combined. Now, this year is 2016 because we're really early in the year. There's not even a month full of data in January, but this shows you monthly what the numbers look like. And so there's no data for 2016, so you can turn them all off if you want to. Later on in the year, though, it will show you how we are comparing to this thing, and I'm going to show you that in another chart. For now, though, let's take a look at this just for last year, broken out by month, median sold to list price for 2015, and then these kind of bands. So this is the median for last year. Interesting, right? So in January, we saw a little bit of a discount going on. We saw, the median price, the 50th percentile, half of the property sold above, half of the property sold below, for 99.24%. So almost full price. I mean, it's like 0.75-ish, 0.76, less than full price. However, February, March, April, May, June, July, August, September, in 4 columns, they all sold for full price on median. Half of them sold for above 100, half of them sold for below. Okay. October dropped off a little bit, 99.24 again. In November, jumped back up. We had a hot November, 99.68. And then in December, it dropped off a little bit, 99.32. But overall, you can see that most of the time it's selling for list price. That's what we're seeing in the marketplace. All right, so I'm going to turn off the median for a second. And I'm going to show you that 40th to 60th percentile again. So this represents the 20% that's in the middle of the market. Okay, 40% of them are below, and 40% of them are above. And so basically, this is the middlemost 20% of the market. So in January, in order to be at the 40th percentile, you had to be at 98.27. If you were below that, that represented the bottom 40% of the market. And in order to be above the 60th percentile and above, you had to be at 100%. So what's interesting, though, is how this goes above the 100% line. Here's the 100% line. We can see in whatever this is, April and May, that in order to be part of the 60th percentile, you had to be at 100.91 or 100.94 or 100.51 or 100.3. So for 4 months of the summer, the hot part of our season, properties were selling for above asking price. You can just see it you can see it visually now, what's going on. Now, if you want to see what the 30th to 70th, you can see there. And remember, the 100th line is right here. So there's a lot of mass above this line. There's a lot of mass above 100%. That is not always the case. Okay? That's an unusual market. Here's the 20th to 80th percentile. Here's the 40th to 60th. So you can see how these overlap, and you can see where the darker areas are and turn these on and off in order to play with them. So you can get a feel for that. Okay? And then there's the median kind of lapped over that. All right? This is a really good tool for finding out if you're looking at it on a weekly basis, because I've got a weekly version of this chart too. If you're looking at it on a weekly basis, you can kind of get a gauge of how hot the market is and see, what the overall census is. Is the market cooling off? Can I come in and be a little bit low on an offer? Do I have to come in really, really strong because people are going crazy? You can get a really good idea of what's happening by looking at this data. All right, so let's take a look now. This is the weekly chart that I was telling you about. Same type of data. It's the sold price to list price, but instead of doing the basically each month and only showing 2 years data, I'm now showing weekly what's going on in the marketplace. So here's what's interesting. Let's turn off last year. This now shows you this year's data. In the first week of the year, properties on median sold for 100%. I'll turn off these other bands for a second. In the second week of the year, properties sold for 100% on median. In the third week of the year, we had a little softening. Properties on median sold for 98.44. Here's what's interesting. This shows that 40th to 60th percentile, the 30th to 70th, and the 20th to 80th. You can see that we're not above this 100% line, even for the 80th percentile. So that means that a huge number of properties are selling for list price and a little bit below, which you'd expect. It's January. But we're still seeing that be pretty high. Now, let's compare that to how we did last year. What I'm going to do is I'll show you last year's number, 2015. And this is the line for that. So last year, first week, 100%, 100, dropped off 99.2, 99.24, 99 for that. And then pretty much it was hot for most of the summer or above. And then it slowed down a little bit, whatever this is, week 38, whatever that is. You can go figure out what week 38 is, kind of looking at a calendar. But you can basically see that we softened up a little bit. But over the summer, super strong. Compared to this year so far, we're a little bit worse off than we were last year, according to this. Let's just look at the 40th to 60th percentiles and see how we're comparing. So last year we had a similar thing going. We're down below the 100% line. Over the summer, a lot of it above. Can you see how that? This is like a softer market. You can kind of make lower offers. This is a softer market. This is a super hot market. Everything's above 100. So let's turn on the 30 and 70s. So that shows you the 30th to the 70th percentile. And you can see a lot of those above. If you kind of click on the 20 to 80, whoops, turn this off for 30 to 70, and we'll turn on 20 to 80 here. You can kind of see that we're seeing a lot of stuff above 100% when you go from the 20th percentile to the 80th. So you can really look at that chart and see it. What I'm going to do is, this is the chart comparing 2016, the very small amount of data we have for it, to 2015, the year before. I'm going to kind of cheat, and I'm going to show you, I've got a secret way that I can look back a year if I'm trying to make a chart for previous year and kind of just see what it is. So I actually just looked at 2014 compared to 2015, and I'm going to just turn off a couple things. I taught a whole class, like an hour-long class, just on basically this chart once. So really what happened is 2014, we saw a lot of properties, selling for on median below asking price. And in summer, I don't think any were above 100. The medians were all below 100. We kind of just saw that, right? Look at 2015. In 2015, we see some dipping out, but we also see some bumping up above 100%. Our market last year on a sold price to list price, kind of measuring how hot a market is, how aggressive you need to be making offers, was much hotter than 2014. And you can see that. There's 2014, there's 2015. That's 2015, and that's 2014. So you can see how the red line is a little bit above that. Now what if you just want to look at this 40th to 60th and see? So this was 2014, a lot of stuff below, and this is the 40th percentile to the 60th. In the 2015 number, there's a lot of stuff above. That's crazy. And you can see how they compare overlapping just like that. That's pretty insane. So the other thing, 30th to 70th, that kind of shows you. You could just see just by how much is above versus how much is below, which year was hotter and which year you had to be more aggressive with your offers. And the thing is, we can look at this as it unfolds. Unfortunately, we're like 4 weeks behind, right? Because you make an offer and it takes 4 weeks for the offer to close and find out what it's sold for. So our data is like usually, 4 or 5 weeks behind, depending on how long things take to close. But still, that's better than having to guess. Now we can see, exactly what's happening. I've a couple lenders that tell me, it's pretty amazing, James, that you're able to get, as many offers as you are accepted. Your like acceptance ratio is exceptionally high. I say, yeah, because I'm looking at the data and we're advising clients what's going on and how they need to bid based on what's going on. We don't want them overbidding, but at the same time, if they like the property and the numbers work, especially as an investment, it's good to know that people on average are bidding 1% above asking price, and 1 in 20 is selling for 7% above asking price. I mean, it's good to know that data going in, so you're not coming low. So that's one of the strategies. So basically, I wanted to show you that. Okay, let's go back here. Let's see, what were we doing? We talked about this one, which was 2015 and 2016. Oh, let's talk about this. So this is a table showing the discount from list price, and it's showing the median for things. And it just quickly gives you an idea of what's going on in different cities. So 2009 through 2016, and it's a table. Fort Collins in 2009 sold for on median 1.89% discount. Green means discount. It's good for you if you're buying. Okay. Blue means it's at 100%. So there's no discount from list price. So instead of doing this as 98.11 or whatever it is, we just said there's a 1.89% discount. This is a 2% discount. This is a 1.96% discount. And you can quickly get a gauge of what kind of discounts you're seeing on median. Okay? Now, interesting thing. I'm going to do data a different way. This is the median dollar discount. Instead of doing it as a percentage, I'm saying how much dollar-wise are we coming in low or high? And so you can see Fort Collins in 2009, people were bidding $4,000 on median. Half of them were below that, half of them were above. $4,000 under asking price. Interesting though. You can see the trend though. 2009, 4,900. 2011, 4,500. 2012, 3,000. 2013, 975. And for the last 2 years and so far this year, on median, no one's getting a discount. They're bidding asking price. Okay? That's what those numbers mean. And you can just see what's happening here. Okay? Here's the other thing. So we've been talking a lot about median, that 50th percentile. Now let's look at the average, the same chart for average. You basically come in here and see Fort Collins on average in 2009 was seeing a 2.36% discount. In 2015, the red number, that means people paid a premium. It went for above asking price. So instead of getting a 0.51% discount, you paid a 0.51% premium. That's what the negative or the red numbers mean. You can just see visually where we've been seeing with the market, where it's hot. Okay, and you can look at all these different cities and check it all out. And then over here it says the average dollar discount from list price by city and year, and you can see exactly what the average dollar amount is. So you take up all the dollar amounts and you average them all together by doing that. Okay, so you can see where the numbers are. Of course, red is people are paying a premium. So in Wellington in 2015, people paid on average $1,792, or almost $1,800 more than asking price on average for properties in Wellington. Kind of interesting to know. Okay, so that's a table going over that. Let's take a look at something else. All right, so some people say to me, "Hey, James, I'm an investor. I see on late night TV, and I hear on the radio, and I read books, and foreclosures is where it's at. I really want to go find a foreclosure because foreclosure properties I'm getting deals on, right? That's what you'd expect. I'm seeing a lot of foreclosure, books and courses, and foreclosures is where you get deals. Let's take a look. I'm not so sure. So in Fort Collins, the median percentage discount from list price for foreclosures only, if we're just looking at the foreclosed properties. So in 2009, people saw on median, 1.13% discount. I don't think that's that great. In 2014 and 2015, they didn't see any discount at all. Okay. In 2014 in Loveland, people paid a small premium for foreclosure properties. So you're not getting these. You're not coming in on the foreclosure properties and lowballing them. That's not what we're seeing historically. So the data suggests that our market is not seeing people lowball on foreclosures. And here's the average percentage discount. And you can see those numbers too. So in 2014 and 2015, on average, for foreclosures, properties, REO properties that are listed in the MLS, people were bidding above asking price on foreclosures. So if you think you're going to come in and lowball a foreclosure, stats don't suggest that you are. They suggest that you're not. They suggest that you're actually going to bid a little bit above. Kind of an odd one here. In 2013 in Windsor, people were bidding 6% above on average to get a foreclosure. That's just crazy. Very crazy. Okay, so you can kind of look at these numbers and see. That's kind of another interesting chart. Okay, so here's another interesting one. This is short sales. If I don't hear about foreclosures, I hear about short sales. The short sales, where a short sale is basically where a seller has a property, they owe $200,000 on it. The property can only be sold for $190,000, so they have to go to their bank and say, "Hey, Mr. Lender, in order to be able to sell this property and bring my loan current in a lot of cases, I need to sell the property for less than what I owe. Would you consider accepting less than the $200,000 that I owe on the property and allow the sale to proceed?" And the lenders will often say, "Okay, in this one circumstance, I'll go ahead and do that. Let's get out of the property. We'll get most of our money back and we'll let you go and you can move on." Sometimes they'll go after you for the difference. Sometimes they won't. There's kind of some laws about that. But you basically get the idea that that's what a short sale is. And so a lot of people read, if foreclosures are there, let's also look at short sales. There's an opportunity. The sellers are motivated, and the saying was at one point, which I don't always believe, but the lender doesn't care. You can come in low on the short sale, and the lender doesn't care. It's not like you're lowballing the seller, and the seller's going to get mad at you. The lender can take a 10% discount. It's not going to hurt that much. Maybe not. Let's go take a look at what the data suggests. Median percentage discount from list price in city and state in a year for short sales only. So these are just short sales. 2009 in Fort Collins, people were getting a 2.7% discount from list price on the short sale. Not so good. Last year, 0.44. In Loveland, people paid 1.33% premium. They went above asking price even on the short sales. That's crazy. So you can kind of take a look at these numbers. And then these are the averages. Same thing we've been talking about for a while. Short sales, still short sales, still the city and still the year, but these are average and these are the median. You can kind of look through those numbers. Interesting chart. All right, so here's the next one. People say to me, what are the biggest discounts or the biggest premiums people are paying on properties? Is this like exceptional properties? What's going on? And so what I did is I made a little table. And the table shows what is the biggest discount someone has seen on a property in Fort Collins? And so these are the 6 biggest discounts that have happened basically between January 29th of 2015 and January 28th of 2016. And it shows in that last year what is the 6 biggest discounted properties that have sold. So you can go look through those and see. I'll show you also, we can drill down and see what's going on by right-clicking or control clicking on this little magnifying glass. The magnifying glass pulls up my kind of comparison table where you can compare MLS properties. And now you can go look at what the properties were and see. Now, you say to yourself, "Hey, James, that's a pretty big number here. We're seeing a $199,000, almost $200,000 discount, $195,000 discount, 150, 125, 124. Those are huge discounts on properties." Yeah, because the properties are 1.3 million. almost 1.1 million, 1.25 million, 1.5 million, and 1.1 million, and 1.3 million. They're all huge property prices to begin with. And so as a percentage, yeah, there's still even big percentages, but that's a soft market. And I'll show you this when we get to months of inventory. That's a much softer price point than we're seeing at like the normal rental market of $300,000 and below in Fort Collins. So very interesting things happen. If you want to go see what the biggest premiums are, where people are paying the most for properties, we can click on the magnifying glass on this side. It'll pull up those properties. And those properties are a little bit more reasonable. There's 600,000, 500,000 type properties that we're selling for. And of course, you can drill down and see a lot more details. You can see the description of the property and see what their square footage and stuff is. This is a really cool tool. I'll cover this another time. All right, getting back here. So on average, over the last year, $171 is the discount people are getting in Fort Collins. You can kind of see all these numbers. You can drill down for these. If you want to just pull up all the MLS numbers, like you're saying, hey, James, could you just pull the MLS sheets and send this whole table to me? Just go ahead and copy and paste these and send it in an email to me, and I can just go and pull those MLS numbers and send you MLS sheets for those two. That's why that's there, if I ever want to go drill down and look at details. But the magnifying glass is a great way to compare. Okay, so that's all properties in the city. Let's take a look at foreclosures. And if we don't have data, if you don't have a lot of properties selling for above, like Windsor here, there's not a lot because there's no ones in the last year that have sold for above and below. It just haven't been any. So Fort Collins, though, you can see these are the 6 biggest discounts, or if there's not 6, it'll kind of shove the line down. So basically it shows you those numbers here. This is the average, and this is the biggest premiums. Okay, so for foreclosures, this must have been a big, expensive foreclosure. But you can go look at those, and you can drill down and see what's happening there. But on average, the discount in foreclosures was $11,000. The discount in Loveland was $590. Discount in Longmont, $10K. In Wellington, it was a premium. In Greeley, it was $3K. And in Evans, it was $12,000. But you can drill down and look at those and kind of look at it in detail. And this is a client tool, if I hadn't said that earlier. Okay. Same thing, you have access to the MLS numbers down here. All right, cool. So that's kind of what we covered there. This is a different one. This one shows the 10 biggest discounts by percentage. So you can take a look at this chart and look through it. Instead of just doing sheer dollar number and having all those really high valued properties show up, for here I said, okay, what's the biggest percentage discount? And you can go look at those for Fort Collins and see, and then drill down and look at those properties to try to do it. And when we cover, there's a class later on that we're planning on doing. It's like fix and flip case studies. We're going to take the properties that were fix and flip pairs that occurred, and we're going to actually print out MLS sheets, and we're going to look at these and say, did people bid significantly lower? What happened? What was the pricing history that was going on? Did they do a price drop, and then it looked like a deal? Were people bidding it up? What was happening with that property? And we're going to try to analyze it for similarities. So if you're interested in fix and flip, we're going to do a class on that too. All right. I think that's where we're going to stop for this one. I think we've covered all those. I think we've covered this. So I'm going to stop the video here because we've covered everything, and I'll go on to the next video with the next topic. So I'll be back in a moment.